Hey everyone, welcome back to the Tax Show for People Who Owe. I'm Dave.
And I'm Phil.
And today we're talking about class action settlements or other settlements and some of the tax considerations we should have when you're looking at a fat check. Phil, seems like every day we're getting something in the mail about a potential class action settlement we could participate in, or a data breach, or an opportunity for us as customers to participate in getting money back. Is there anything we should consider before we sign up for this class action?
Not speaking as your attorney or any people's attorneys out there, but you do give us some rights in preserving your claim against that company when joining a class. But if we're just talking about the tax implications, class action settlements or personal injury settlements or settlements arising out of any legal claim can be a landmine for a lot of taxpayers out there.
And the reason why we thought we'd cover this today is because we had a customer come into our office and talk about this big, massive tax bill he received and didn't know where it came from. When we dug into the case, Phil, what did we find?
We found there was a 1099 purporting that he earned, say, $100,000 in the settlement.
So more than likely, the money's already spent because it takes IRS years to catch up on this debt that's now due. So Phil, we thought it'd be important for you to point out some of the tips for our viewers out there, some things you can tell them to help them navigate this process. What should we tell them?
As usual, read the fine print. Really understand what you're getting involved with and what rights you're giving up to take part of the class. But on the tax side, also understand if there's any withholdings that have been taken from that settlement. So say the $100,000, perhaps $20,000 was withheld, or perhaps you had an option. I would always recommend you do withhold. And last but not least, understand why you're receiving those funds, because it could or could not be taxable depending on the reason.
All right, great tips, Phil. Now let's go back to our original case, our customer. He received a $100,000 settlement, but $30,000 of it, right off the top, went to his attorney. Is that amount taxable?
Yes, even though the client stated, I never saw any of that money, David. And while we understand, it's like if you went to go work your normal day job, earning a paycheck, and then pay for professional services, whether it's plumbing or legal work, you still have to pay taxes on the wages you earn. So settlements are no different. It's a taxable event and it's income to the taxpayer.
Good point. And our customer, unfortunately, one of the first calls he made when he found this out was to that attorney that was representing him, not happy that he now has a massive tax bill he has to work through. So Phil, let's talk about how taxpayers are notified, maybe years later, about a settlement they've taken and now they owe a tax bill. What would they know?
So most taxpayers out there are under the assumption, just like the retirement account, that these settlement payments or these retirement draws are non-taxable. So they actually leave them off of their tax return. And so the first time they'll hear from the IRS is usually a CP 2000, which you guys know, if you check this link above, is underreported income.
Yeah, so the IRS is now catching up. Again, they're not the fastest at this, and you have a massive tax bill looking at. It's important that you said earlier that we look into the disposition of this particular settlement. And you mentioned sometimes it's not taxable. What are those cases?
Well, we're gonna need a lot more time for that, and we'll need specifics of that particular settlement. But a great rule of thumb is if it involves personal injury, normally a lot of those payments related to that personal injury is excluded from tax.
Why do you think that is?
Typically, as you know, hospital bills, right? I think just good tax policy dictates that you want to be able to give someone who's personally injured the funds to recover.
If there's harm, care needed, then They want to give them the funds without taxes, without worrying about it. So if you're dealing with the potential to sign up for a class action or a lawsuit, we advise before you book that trip to Vegas, you consult with a tax professional. You can call Optima or call one in your local area, but you should consider these downstream ramifications before you cash that check. Phil, any last parting words?
As usual, time is not on your side. So if you receive one of these settlements and have already spent it, the time to act is now.
Sooner the better. Thanks for joining us today, everyone. We'll see you next time. Hey, everyone. Thank you for watching today. Please be sure to like
and subscribe
so you're up to date with all the information you need when you're taking on the IRS.
And as always, do something.